Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Friday, December 30th. Jen Amos is off today. We're looking at a slightly higher open on this final trading day of the year. Volume has been light all week, with just 352 million shares changing hands on the New York Stock Exchange yesterday. But today is likely to be even lighter, as most traders have already closed their books on 2011. We saw some solid gains on Wall Street yesterday, amid further signs that the U.S. labor market is beginning to recover. That rally helped push the S&P 500 into positive territory for the year. The Dow Industrials are up about 6% over the past 12 months, while the NASDAQ composite is still about 1.5% lower than where it began the year. But that's a solid performance relative to some other developed markets. The broad Stoxx Europe 600 index is on track for a 12% decline in 2011, and Asian stocks fared even worse. Japan's Nikkei 225 dropped more than 17% this year, while Hong Kong's Hang Seng Index was down 20%, and China's Shanghai Composite slipped nearly 22%. Turning to the other asset markets, the euro has rebounded a bit from a 15-month low against the US dollar hit earlier this week, but it's trending lower again this morning and is set for a 3.3% drop against the dollar on the year, its second straight annual decline. Meanwhile, oil prices are dipping back a bit from their recent highs, now right around $99 a barrel. Crude had jumped well above 100 amid threats from Iran that it would close the Strait of Hormuz, a major shipping lane, if new sanctions were enacted. And gold is bouncing back from 6 straight losing sessions, now trading at around $1,570 an ounce. But the precious metal is still down more than 10% just this month, as gold seemed to lose its luster as a safe haven investment. One asset that has retained its safe haven appeal is U.S. Treasuries. Right now, the yield on the benchmark 10-year note is holding steady around 1.9%. On the corporate front, we're keeping an eye on shares of Sears Holdings. The retailer detailed plans for some of the 120 store closings it announced earlier this week, including 38 Kmart stores and 25 Sears properties. Florida will be hit the hardest, with 11 locations shutting down, followed by Ohio, Michigan, and Georgia with 6 each. And finally, AMR, the bankrupt parent of American Airlines, will be delisted by the New York Stock Exchange. Its shares have fallen below the $1 mark since it filed for Chapter 11 protection last month. That's the latest from Weiss Research. I'll be back after the opening bell with all the market reaction.